Hey everyone, Ford reported quarterly earnings results that had management raising expectations for the year. So I'll review the numbers that had Ford's management so optimistic, and I'll update my buy recommendation for Ford stock. Coming into the quarter, I did not have Ford rated as a buy. You're going to want to tune in to see if I'm changing that recommendation. So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so like I mentioned, Ford raised its expectations, saying that for the full year, adjusted earnings before interest and taxes is tracking to the high end of the 10 to 12 billion expected, and the company raised their adjusted free cash flow target to 6.5 to 7.5 billion, and capex guidance tightened to between 8 and 9 billion. This was despite the fact that Ford's unit sales decreased. They sold 1,045,000 units for the first quarter in 2024. That was down from 1,056,000 units in the first quarter of 2023. That was helped by higher prices and by a better mix of vehicles sold, which increased revenue overall. Ford's revenue in the first quarter came in at 42.8 billion, which was up by 3% year over year, even though the vehicle shipments declined slightly. The company has increased revenue in each of the past 3 years and expects to do so again in the full year 2024. Now, car company prospects are still solid in 2024, although they're not as good as they were during the earlier days of the pandemic. The car industry overall worldwide has been plagued with oversupply for several years, I should say more than 10 years. And the supply chain shortages during the pandemic actually helped the industry focus more on profitable models, reduce supply, and that allowed them to generate sales at the top end of all of their models. They were actually selling cars at higher than MSRP. You can recall yourself, if you went to a dealership during 2020, 2021, or 2022, you're probably being quoted at above MSRP for the cars that were even available, if you even found one that was available. 2024, those supply chain shortages have eased, and the industry is going back towards being oversupplied, and they're now having to offer discounts and lower prices just to get these models sold, and inventory is building up on dealership lots, especially electric vehicles. Now that supply for legacy models are improving, consumers now have a choice between electric vehicles and internal combustion engine, and way more often than not they're choosing internal combustion engine, and that's adding to the inventory piles of electric vehicles on dealership lots. In fact, dealerships are complaining to companies like Ford for sending too many electric vehicles. They're saying, stop sending us EVs. Customers do not want these. Stop making them. There's enough already. Please don't make us buy these electric vehicles from you. So Ford Pro achieved first quarter revenue of 18 billion. Ford Pro is the professional segment for Ford. This is where professional customers are buying the heavier duty trucks and the super duty trucks and the vans that they sell to the United States Postal Service. This was up 36% with earnings before interest and taxes of 3 billion. EBIT is another word for operating income. That was 3 billion on revenue of 18 billion. A margin of nearly 17%. Really profitable segment for Ford here, really allowing the company to invest in other categories like electric vehicles. Now, if it was Ford's choice, they probably wouldn't be investing in electric vehicles, but the government is mandating, at least the government in the US is mandating, that more of Ford's sales come from electric vehicles. And so they're being forced to produce these cars that customers don't really want. Remains to be seen where the end game is for this industry. I doubt the government will continue forcing companies like Ford to produce electric vehicles if customers are not buying it. They don't want to put Ford out of business, and if Ford keeps making electric vehicles that customers are not buying instead of making the legacy vehicles that customers are buying, then eventually it'll just go out of business because it won't be able to make any money just by selling electric vehicles because customers don't want those at the same rate that they want the legacy internal combustion engine vehicle. So we've already seen some delays of the mandates, some easing of the restrictions, and I wouldn't be surprised if as we progress and as the governments around the world realize that people don't really want electric vehicles, they're going to push out these mandates and make them easier and extend deadlines and allow these companies to make more hybrids instead of completely electric vehicles. And I think that's the direction that's more likely to evolve, unless there's some really revolutionary advancement in electric vehicle battery technology that allows for faster charging times and longer range. And there is some development coming out from that front with the solid state battery technology providing faster charging, but there needs to be a lot more progress on that front to really make electric vehicles attractive to consumers, because right now they're not. So like I mentioned, sales of Ford's hybrids vehicles were up 36%, and they're on track for full year 2024 growth of 40%. So hybrid vehicles are highly sought after, way more so than electric vehicles. And Ford is investing accordingly. They're going to make a hybrid version of every vehicle in its North America portfolio by the end of the decade. So this is for, improving the fuel economy of a lot of the vehicles, and consumers that are, on the fence between internal combustion engine and electric vehicle. The hybrid is a nice middle choice for those customers. But Ford Model E, which is its electric vehicle segment, revenue was down here as wholesales declined and significant industry-wide pricing pressure continued to affect electric vehicles currently on the market. The segment had an operating income loss of $1.3 billion. So as I'm seeing data come out throughout 2024, we just saw Tesla's numbers come out where they saw a mid-single digit decrease in the number of units delivered. Their inventories more than or almost doubling because they're having all this inventory sitting around and people aren't buying it. And other car companies, including GM, coming out with similar numbers. It's becoming more and more evident that EVs are not what customers want. They were forced onto customers, they were forced onto companies, and other than a few people that really can benefit from the electric vehicle, roughly 1 out of 10 people, that's about the market that's going to want electric vehicles. And that's with all of these government incentives and mandates. Imagine what demand is without all these government incentives and mandates. So the organic demand for electric vehicles is not there. There needs to be more government support if they really want to push this industry, or they need to allow companies to gradually improve or increase these units and not be forced to increase these units, because that's putting the whole industry in a difficult position, causing price wars, causing losses on the bottom line for nearly every EV company or nearly every EV segment. Tesla is one of the few companies that's profitable as an EV company. Most others are still losing significant sums on the bottom line in those segments. So for the full year, Ford is tracking to the higher end of the guidance, and they're adding recent actions to match investments in support of electric vehicles to revised expectations for the pace of EV adoption by customers. Now, what does that all mean? That's essentially a long-winded way of saying that they're decreasing investments in electric vehicles. They're not expanding at the rate that they said they were going to a couple of years ago. And this is in line with almost every EV segment of every company I've been following. Tesla recently said that they're not going to expand. They're not going to add a new manufacturing facility. They're going to use their existing facilities. Rivian said they're going to pause their expansion plans for their manufacturing facility. GM said that they're decreasing investments in electric vehicles. So all of this is good news for the industry overall, but it's going to take time for the supply and demand imbalance to come into better balance. Right now, there's too much supply of electric vehicles, way too much supply of electric vehicles. compared to the existing demand. So all of these companies need to reduce supply in order to balance it out with where demand is, and there's a long way to go. But they're heading in that direction, thankfully. So to update my recommendation on Ford stock, I'm keeping it as a hold. You've known that I'm not a fan of car companies. I just think there's too much capital investment required. It's too cyclical. The potential for this industry, considering that it's almost perpetually in oversupply, the competitive dynamics, the strong negotiating power from labor, as you saw from the labor strikes the year before, all of which makes this an unattractive industry for me. So I'm keeping Ford stock as a hold. I wouldn't advise investors buy this stock. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.